Got the management of the bank joining in. We've got Shanti Lal Jain, who is the Managing Director and Chief Executive Officer of Indian Bank. Thank you so much, Mr. Jain, for joining in. I want to start by asking about the assessment of the quarter gone by. Clearly, there are improvements that are seen on the asset quality side, and the PAT has jumped significantly. What stood out to you?
And as a result, what is happening, our cost of deposit has come down and our margin has improved from 2.86 to 2.89. Our collection efficiency has improved based on month-on-month basis as well as on a cumulative basis. Our gross NPA and net NPA has declined. Our provision coverage ratio has improved. As far as our capital position is concerned, capital, of course, slightly decreased from the last quarter, but it is in tier 2 where we have exercised the call option and paid 600 crore by tier 2 bonds. Otherwise, my capital has increased in CET, as well as in AT1, and that is exclusive of the current half-year profit of 2,000 crore. So, in lump sum, your income is increasing, your spread is increasing, your business is growing, right? Or your NPAs are declining, your SMAs are declining, and your this collection efficiency is improving. Slowly, we are making on track. And all this has culminated in an increase in operating profit by 11% and increase in net profit by 164%.
All right, but I want to look at a couple of metrics. Your net interest income number, for example, has fallen. When I look at the NIMs, that also has shrunk on a year-on-year basis. Could you give us some perspective on these two, specifically on the margins? Do you see that stabilizing the quarters to come?
You see, our NIM is 2.89%. It was last time 2.86%. If you see last year what happened? There was a COVID period. There was a Supreme Court directives not to classify any account as NPA, and as a result, there was no interest reversal in the corresponding period of the last quarter. But after 31st March, it is being classified and interest reversals are happening. So on a sequential basis, how the things are improving, that is the take from this result, sir.
Mr. Jain, good morning. You know, the provisioning that we're seeing at Indian Bank continues to look elevated and seem high. Why is that? And what does this mean about recoveries? What exactly is there an issue? Is there a slowdown? What's going on?
So this quarter, you see the provisions. One of the major provision this quarter has come from one NBFC account where we are having a 50% provision. Second is COVID restructuring where we have to do a 10% provision. Barring these two items, if you exclude these items, you can say these are a one-time item because it's a big account which has slipped and we have built a 50% provisions. So there will be a reduction in the provision going forward, which I see.
Mr. Jain, thank you for clarifying that. There's something else I wanted to ask you. When I go through your press release, it states, and I read it out, the bank has focused on capital light growth in credit, unquote. What does that mean? What is this strategy?
So basically, AA, AAA, where basically the risk rates are 20%, 30%, 50%, command business, or a retail. Retail means a jewel loan, virtually there is no capital requirement. On a retail, it is a 75%. Housing, it is a 35%. So we will be continuing to focus on those.
Thank you so much for taking the time. Wish you all the best for the rest of the financial year as well.